Alrighty, ladies and gentlemen, welcome to day 3 of the virtual Wealth Code Summit. Uh, I'm not your host today. I was music maestro, so let me hand it over to the ladies so they can do what they do best. And I'll be quiet and let you ladies take it from here.
All righty, all righty. Well, thank you so much, Dion. Just such an awesome job getting us going. And yes, welcome to day 3. You all are trucking along. Today is quiz day, your first quiz. I do trust that you all have been in the academy and have been familiarizing yourself, studying your material. I think that you all are going to do great on this quiz. And of course, you're going to take it real time in class with us, and we'll also be able to go over some of those questions that as we go along, just depending on what the results are. And so this is also an opportunity to ask questions as it relates to some of the questions that you're going to have, and we can expound even further on that. So we're going to go ahead on. The links are in the chat. You can access the quiz, and you can begin taking your quiz. And when everyone's finished, we will resume. And of course, what do we have today? Bear with me one moment. I'm trying to get my itinerary syllabus up. Sheila, can you just go over quickly what today's session is going to be? I do apologize, I didn't have it up.
Sure, no problem. And did you say that the quiz link is in the chat already?
Yes, do you see it?
No, I don't see it.
Really?
Probably because I came on after you put it up, but I guess we'll put it up again.
Yes, it's there, but as she said, she had logged in a little bit later, so she didn't see all of the comments. So if anybody just joined and they didn't see it when you first added, it'll be good for them so they can see it again as well.
Right. But so otherwise I will talk about what we're doing tonight while you get everything situated on your end. So everyone, we are going to invite you to take a quiz, and know that it is just for you to see where you're at this point from what you've been able to study. And then from there, we're going to go over whatever seems to be the most needed topic based on the results we see from the quiz. So we will review the test results in the areas of deficiency. And then from there, we're going to bring on our brother, Ronald Glover, as some of you know him as, and he's going to help give an overview of the IML Academy Basic Module 4 and Technical Analysis. And then from there, we'll also talk about how to take good notes with that, and go over the assignment that you will have to prepare you for quiz 2 tomorrow. So that's basically the gist of what we're doing tonight. We ultimately want to help you feel good about where you're at right now as you take the quiz. So we'll probably give everybody about 10 minutes from this point to take the quiz. But we'd love to know if you all can see it, you all have access to it now. If you don't, let us know. But let's say between now and 8:20 p.m. Eastern, we'll allow everybody to take the quiz. How does that sound?
All right. I guess I probably will play a little music, and if it bothers, like you say, you can just cut your computer down, but we'll give everybody 10 minutes of musical meditation while you guys take the test.
I like that.
And for those of you who just came on, again, we're allowing everyone to take the quiz. Quiz number 1, and the link to the quiz is in the chat, in the Zoom chat here. And this is just for you to see where you're at from all the information that you have reviewed so far. And if you can't access it there, you can access it in the Facebook group. There's a reminder about day 3, and the link to the quiz is in that post. So go on ahead and take the quiz. Thank you, Dion, again for the music.
No problem. Is that okay? I don't know. I don't want it too loud. Somebody told me yesterday the music was too loud. It is so amazing how people cut class on test day. How about this one? If you finish the test, just put a number one in the comments. That way we can take a tally and see who's still taking the test, see who's finished. Tyree, can you see the link to the quiz in the group chat? Awesome, awesome.
Okay, we're going to give you all another 4 more minutes to take the quiz. I see that half of the people here has taken it, so I'm going to give another request for those of you who are on to go ahead and take the quiz. She's going to be done in another 4 minutes. Thanks.
Countdown. Huh? It's a countdown.
It's time for the percolator. It's time for the percolator. It's time for the percolator. It's time for the percolator.
It's time for the quiz results. It's time for the quiz results. It's time for the quiz results.
It's time for the percolator. It's time for the percolator. It's time for the percolator. It's time for the percolator.
You wilding out tonight, Dion.
Just a smidget.
It's time for the percolator. It's time for the percolator.
I don't know how to do the percolator either, so don't ask.
I have one individual still taking the exam.
It's time. It's time for the percolator. Percolator. It's time for the percolator. It's time for the percolator. Percolator. It's time for the percolator.
Fred, you got like 60 seconds to take the test.
It's time for the percolator. Time for the percolator. It's 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 time for the percolator.
Okay. Thank you so much, Dion, for that countdown. Believe it or not, Andre just walked in. He was like, hey, is that the percolator? That Chicago thing. That's great. Okay, everyone. So we see who has submitted the quiz. At this point, we're going to tally up what we have, but you're welcome to continue to take the quiz because we are going to go over some of the areas where we see a lot of people did not get it correct. And then we'll go into a question and answer just based on what we're discussing over the quiz. And I want to say thank you to everyone who is on now and with us from all different parts of the world. We commend you for getting in this session so that you can get this information locked in. Okay, so Janice and I are both looking at the results. Janice, you see the results too, correct? Janice, where are
Yes,
you?
I'm sorry, I was muted. Yeah, I'm actually in the exam. Yes, I do.
Okay, good. Okay, and so what we see, we need to talk about pips.
Mm-hmm.
We need to talk about what animal represents a cell. And looks like we can talk about what event causes high volatility in the market. So let's talk about pips. That's, what it is, how you calculate it, what event actually causes the volatility in the market, and a little bit about the buy and the sell questions that we had. Okay, so Janice, would you like to start or would you like me to start? Janice.
I'm with you.
Okay.
I'm used to my double screens. Okay, so yeah, let me get back. So bear with me. I have a couple of screens up here.
No problem. All right, no worries. I'll start with this. Okay, so everyone who did get 100, you'll see that. If you got 90, you'll see that. If you got less than 80, you'll see that. And then you should also see answers, the correct answers of the questions from the quiz. So you can take note of that for your own record. So what I want to do right now is to basically talk about calculating pips. Now, it looks like half of you do know and the other half don't. So that's why I figured let's go over the question where it said, if you enter a trade with a standard lot size and you garnered 85 pips, what would be your profit? Let's go over that. Okay. Now, let me ask you to participate, if you don't mind, in the chat. If you do not know what a standard lot size is, please put an 8 in the chat. If you do not know what a standard lot size is, put an 8 in the chat. And then we could take it from there. Okay. And there's no shame. Okay, so let's do this. Who's sharing their screen right now? Is this Janice? You sharing your screen? Or is that Dion?
No, that's not mine.
No, that looks like me. Bear with me, guys. I'm certainly having technical challenges. One moment.
You can stop sharing your screen. You can stop sharing it though. While you get it together. So, okay, great. I do see a few of you that let us know that you don't know what a standard lot size is. So now this is talked about in, excuse me, in a basic module. Let me just tell you exactly where. What is a pip and lot sizes? This looks like it is basic module 2.
We still see Janice' screen though.
Yeah, Janice, could you stop sharing your screen, please? Janice?
That's just Joe's screen.
Can't get back. I can't get back. So.
Oh, okay. So Joe, at the top of your screen, you might see a red button that says stop share. No?
Go all the way up to the center.
Yeah, that's where I was also, because I'm not actually sharing. Does it show that I'm sharing?
No, we realize now it's Joe sharing his screen. So it's just trying to help.
All the way up to the top, Joe, where that green line is. There you go.
There you go. Okay, great. Okay. So thank you, Tino. So I'm just going to go into IML Academy real quick, and then I'm going to share my screen with you because I want you to know exactly where to go back to in order for you to see answers to these questions. I hope that sounds fair enough. So I'm going to share my screen right now. And here, like I thought, it's in Basic Module 2. See, I'm hovering over the word Basic 2. In this module, you will find the answer to PIP and to lot sizes, okay? Now, I'm going to tell you, I did have to go a little extra from IML Academy to Google lot sizes, and I'm going to stop sharing my screen now so I showed you that. And the reason why is because I was paying attention to the Facebook group IML Elite, and there were other people who were posting these different screenshots of lot sizes. So now this is something that we can definitely share with you in the Facebook group after we're done with the session tonight. So then you'll see a screenshot of lot sizes broken down. But just so you know, right off the bat, standard lot size means 1.00. So when you're looking at your screen to get in a trade and you decide to put in a lot size, a standard lot is 1.00. That's what it looks like. Now, what that means, however, in US dollar terms is $10. One standard lot is equivalent to $10 US. So in the question, it was asking if you garnered 85 pips from using a standard lot, Basically, how much did you make? And so when you think of $10 times 85, then you come up with the answer of $850. Okay, so that's how you get the answer to that question. And in reference to what is a PIP, most of you know what a PIP is, but PIP is basically expressing the difference, or the movement, I should say, the movement between the currency price. So a PIP is not, I'm trying to get back to the screen. A PIP is not the point, or I should say, the PIP is not the percentage indicator point. That was a trick. It is the unit of measurement we use to express the change in value in the market. So another way that people break down the acronym PIP is percentage in point. So percentage in point is another way that people describe PIP, as well as price interest point. So again, the answer that some of you chose, percentage indicator point, that was a trick, and that wasn't the case. But now you know. It is the unit of the measurement we use to express the change in value of the market. And in reference to calculating the PIPs, is there anyone who did not understand my explanation of how to calculate the PIP with the standard lot? If you did not understand, please put a 2 in the chat if you did not understand. And then we'll go on from there. Okay, so 2. All right, that's fine. So again, let's see if I should share my screen. Go a little bit further for you. Okay, so I'm going to share my screen. I'm going to share my notes just so that we can help you with this. And you're going to see your faces again on my screen, and then I'm going to get to
So you mean, Sheila, you mean to tell me that a PIP is not one of Gladys Knight's brothers?
No, not this time. He didn't pass the audition on this one.
I don't know, did Sheila freeze?
It looks like there she go. Is she? Where is she?
And she probably had to sign back in, come back in, did something on the computer.
Mm-hmm.
Yeah, we
But
tried
the
to.
main thing though, guys, is with the PIP, and with, like Sheila said, we'll share that breakdown for you, and it's always good to have it handy until you know, when you see it, the different the PIPs and the U.S. equivalent, because that's really important. And simply, you're just really multiplying your PIPs with your lot size, and that's how you calculate it. But you won't really get an accurate answer if you don't understand what the lot size is, as because whatever that is, if that's wrong, your PIP count is going to be incorrect. Your calculation is going to be incorrect. So you really have to start with that. And like I said, Sheila said, we'll share that in the group.
Yes, thank you, Janice.
You're more than welcome.
My computer crashed, so I'll let you continue.
Well, yeah, I was just sharing. Did you have an illustration that you wanted to share?
I did, but I think I'm going to crash again.
Right.
That's happening.
Yeah, but what we'll do is we'll put it in the Facebook group. And again, just keep that handy until you just know it with your eyes closed. And then you would, when you calculate your PIP, so you have 85, a lot size is $10. So just remember, whatever the lot size is and whatever the PIP amount is, you're just simply multiplying to determine what your US equivalent will be. So if you have a standard lot, which is $10, and you have, gained 85 PIPs, how much money is that? So you just multiply the 2, and that's how you get your answer. That's how you get your answer. Does that clear it up?
That sounds good to me.
Does that clear it up? Everyone good with that? I don't want to move my screen too much because it's doing some funny stuff. And then I believe question 4, if I'm not mistaken, the event, name an event that can cause high volatility in the market. You'll find that, the market does move as a result of various news. You have high news, medium news, low news, but high news, it actually moves the market. And that's news as it relates to anything around the globe. So you may have unemployment rate may increase in Japan. That may be considered high news. And that news in and of itself can actually move the market and create volatility in the market. So the answer to that would be news release. And we are very conscious of the news when we're putting in our trades, as you should be as well, because it will surely move the market. It can move the market in your favor or not. It's just kind of one of those things that you want to watch, but you'll learn what to watch for, and you'll learn how the market moves as it relates to the volatility in the market. So that is the question. That is the question. I'm just curious, what was the dominant answer for that question? What most people put, that I get that one right?
Sure. Yeah, you mean the one for the event as far as what affects volatility? Most of the people got it right. Most people chose news release, but there were a few that said trading at 2 a.m. and Popeye's chicken shut down.
Okay, now whoever said Popeye's chicken shut down, I know you all didn't really think that was right. But then again, who knows? We're not going to assume, because a lot of times, and in all fairness, a lot of times you'll find that people associate the foreign exchange with the stock market. And we know with the stock market, basically those are companies, the success of a company determines whether or not that you're going to be in a favorable position. It also determines if you're going to lose money, because if a company shuts down, that will inevitably impact your stock. So I can understand why people might associate it, but there's a clear difference between the two, a clear difference between the stock market and foreign currency. We trade foreign currency, one country's currency over another. It has nothing to do with the strength or the weakness of a company at all. It's totally separate. And so, which puts us in a much better position, because money constantly moves 24 hours a day from one end of the globe to the next. And we're not concerned with whether or not money is going to go out of style or get booted out from a higher competitor. Those are the issues that companies have to deal with. So yeah, news release is the actual answer. What was the other question, Sheila?
Okay, the other question was in reference to in reference to buying or the animal. What animal reflects a sell? And then the position questions in reference to what position would you place if you expect the value of the currency to rise? So those two.
Okay, so it looks like that is number 8 and number 7 and 8. Okay, so and this is, analogies are really, really good to help us connect what we're actually doing. And as far as a buy and a sell, we reference a buy as a bullish market, an uptrend. Again, it's a bullish market. So a buy will be associated with a bull. And one way that you can, kind of remember that is the horns on a bull is going up. So, and when you're in a buy or an uptrend, the price is going up. So that is one way that you can associate the two and try to, remember it that way. And of course, as for a sale, that is considered a bearish market. So the animal associated is a bear. So that's the difference between the two. And you'll hear that terminology regularly. And when you hear we are in a bearish market, that we're talking about a sale. So you're going to be looking for a sale, and the same would apply for a bullish market. If someone said we're in a downtrend, we're talking about a sale. We're in an uptrend, we're talking about a buy. But as far as the animals, we got a bull for a buy and a bear for a sale. Does that clarify for everyone before I move on to the next one? Put a 1 in the chat. I can't see the chat right now. I don't want to play around with this and lose my connection.
I'll keep it in the chat, but we got a couple of ones coming through.
Couple of ones coming through? Okay, great. Yeah, and that's really simple. You'll certainly remember that. And then number 7, what position would you place if you expect the value of the currency to rise? Now remember, if it's rising, it's going up, it's an uptrend, it's a bullish market. So what position would you be placing? Can you all answer that question for me in the chat? Remember, if the currency is rising, it's going up. If it's going up, that's a bull. Remember, the horns point up. So what position would you place for that trade?
We have some people putting in buy.
Okay, great.
Putting in sell.
Some people putting in sell?
Yeah.
Okay. Okay, so let me just go back and reiterate that. When you're in a buy or an uptrend, those are the terminologies that you'll become familiar with. Just remember, a buy represents a bull. And the reason it represents a bull, this is just a way you can remember it, is because the horns on a bull goes up. If you can just remember that, it's a bullish market, meaning price action is in an uptrend. Price action is rising. So if you were getting into a trade, then you want to put in a position for a buy. Same thing applies for if the position you place, what position would you place if the currency was falling? It's the same. It's the opposite. Of course, that would be a sell because the price action is going down. So that's a bearish market.
That's good. And I want to actually add on to that. Something I realized quite a few people have this sense of confusion about. It's happened to my husband and it's happened to other people I know. Some people who are familiar with the stock market before coming to Forex already have this thought: buy low, sell high.
Mm-hmm.
And it has tripped up some people a bit. So just in case you are thinking about this, we want to help you understand it's different. Forex is different than stock market when it comes to that. So when we can buy, because a currency pair is rising in its price, we get to profit. When we sell, we still profit. So it's not so much about, oh, you just got to buy low and sell high. That's different for Forex. So what we want you to just do is pay attention to the fact that price does go up. And when price goes up, we want to buy because it's going to continue to go up in an increase of price. Okay. And then in reference to sell, whenever we see a price going down for a currency pair, when the price is going down, we can get in a sell and still profit. So it's really just that. Price is going up, okay, I can get in a buy. Maybe with a little bit more understanding. There's a little bit more that comes to that. When the price is going down, I can get in a sell. Just to put it plain and simple, so as not to get you confused with buy low, sell high. Okay. All right. So that's basically it. But people are saying
no, you're absolutely right, Sheila. Because a lot of the terminology, most often people think it translates over, and it really, really doesn't. And with the foreign markets, you want to see what's trending. And again, you'll learn all of those things. You want to see what's trending and follow the trend. And as you probably already heard in your IML Academy, the trend is your friend. So when you're going into your part of your analysis is to determine how is the market trending? Is it a bearish market? Is it a bullish market? and then you want to follow that. And it's more involved, but just for the sake of where we are in your education, just try to wrap your head around the animals and as it relates to the positions.
Sounds good. There's one more question I think we should go over, but before we do, I see a few new people have hopped on to join us, and we're glad you did. Now, everyone did take the quiz, so if you don't see the link to the quiz in the chat because you just chimed in, go to the Facebook group now or later, and you can take the quiz now or later. It's up to you. And then you'll see when you take the quiz in the Facebook group, there's the event. There's a day 3, are you ready? In the Wealth Code Facebook group. And in that post, there's the link to the quiz. But what I wanted to go over was this question from the quiz that basically was asking, it was a scenario, and it said, Frank uses his trading plan to execute trades when viewing his chart for USDJPY. He noticed he missed the entry. When viewing his chart, he noticed he missed the entry, but price had not reached his first take profit, or TP. He wants to get in the trade. Which option will Frank most likely do? Now, I just want to touch on how there were a handful of people who said, give in to fear and do not enter the trade. So remember, Janice, we were talking about how this might be the case?
Yes. Yes.
Okay. So a handful of people did answer that way.
And I can understand. I mean, we know where you are, so we certainly understand. Even more seasoned traders, I mean, by all no means are we experts, and I know I can speak for myself. I've done that plenty of times. I'm like, I don't know what to do, so I'm not going to do anything. But the point of this question is just to kind of share with you that is an option. You could do nothing, but you're in this platform to learn how to trade and to multiply your income. So in order to do that, you have to get in, but just knowing how. So that would be enter market or instant execution. Now, hold on one second. Let me go over this question again before I go any further. Right. So that would be an instant execution because you didn't take profit yet. Now, this is a great area too, because depending on how far along past the entry, it may not be feasible to get in, even though it didn't hit take profit. So I don't know. For me, you have to look at those elements as well, because it's not advised that you jump in a trade in the middle of the trade. There are techniques to entering and exiting, well, entering more so the trade. So what you think, Sheila? I would probably give them that answer.
Here's the reason why I wanted to touch base on it, because what we're learning to do is the skill set of trading, but it also means we are using that skill set with confidence. So we don't want to give in to fear ever. And if we do, like Janice said, it's normal, it's natural. But here's the scenario again. Frank uses his trading plan to execute trades. So imagine you are this person, you already have a trading plan. So you already have an idea of what you want to accomplish, what different pairs you're going to focus on, and you are able to execute trades. So then all of a sudden, you view your chart for this currency pair, USDJPY, and you notice you missed the perfect point, the perfect price point, in order for you to get in the trade. You missed that perfect place. But you also know that from your analysis, you know that there's still time to reach a take profit, the actual good take profit point of this currency pair's movement. And so because you know that, there's a level of confidence you have already. Okay, and then from there, the question is, well, you want to get in the trade. In this scenario, Frank wanted to get in the trade. What will he most likely do? And so he will most likely not give in to fear and do nothing, because he had his trading plan. He knew what he was going to do in trading, and he also knew that the take profit wasn't hit yet. And so it is possible to definitely do it with confidence to get into a trade like this by entering market execution. Now, granted, I would recommend doing this as a practice in demo, so then you can understand what happens when you get in a trade when it's not at the perfect price point, but it still has room to get to take profit. When I've done that personally, I got in demo and I saw how it went to take profit. It felt good. It gave me a little bit more confidence to know that, okay, there will be times where I miss the perfect entry point. Sometimes I can just choose not to, but sometimes I still can. And again, it does come down to that confidence level. So again, the point of this is to encourage you to learn how to not give in to fear, to learn how to have that confidence as opposed to saying, okay, I'm just going to give in to fear. Does that make sense?
Perfect sense.
Okay. That's all I wanted to bring up.
And that, yeah, and of course that was the goal of that question. It's perfect sense. Because you can get stuck in fear and you never get into a trade. And there's always going to be different scenarios like this one, you miss your entry, but there'll always be different scenarios. And it doesn't mean that you're just completely out. You don't have an opportunity at all with that particular trade. You just have to know how to read the market and how to actually get in, given those various situations.
Exactly.
Mm-hmm.
Okay.
Does everyone good with that, Sheila?
Type an 8 if you're okay with that. I know we're giving you different numbers, but if you're good with us moving on, type an 8. Okay, good. They're typing an 8.
Good.
Okay, and lastly, let's just go over pips again. It looks like most people understood how to calculate pips. That was the second question.
Mm-hmm.
There were a handful of people who did not. So let's go over that, if you don't mind. Calculating the pips.
Okay. So that, because we went through that.
Was it when I was not here?
Yeah, we went through it.
Okay. All right. So then never mind. So we're good. We're good. So we can actually just say, all right, quiz 1 is done. Most of you have done really good. So you can give yourself a pat on the back. And then for the questions that we went over, we're glad that it's helped you understand a little bit better the situation. Okay. So now we can actually bring in Ronnie Glover to go over the next phase of studying that we're going to recommend you do. And that's so that you can, 1, get through it, and 2, prepare yourself for quiz number 2 tomorrow. So let's welcome Ronald Glover.
Hey, what's going on, everybody? Can everybody hear me?
Yes.
Yes.
Okay, good deal. Good to see all of you here on the Wealth Code Reveal Summit. The fact that you have pressed your way is a testimony and testament to the fact that you are trying to change your financial life, and you should be commended for that. I know we have other things we could be doing tonight, but we're glad that you decided to press your way and get on this summit. Okay, so before I get started, I want to thank Sheila and Janice for that awesome review of the quiz and putting that quiz together. That was a phenomenal quiz, and that review was even more phenomenal. So we want to thank them for just answering some of the questions that you may have had in regards to the quiz. Okay, I'm not gonna be before you long. I'm gonna keep this short, sweet, and simple for time's sake. I know it's kind of late in the hour, almost 9 o'clock. So I'm gonna go through this real quick and keep it simple for y'all. What I will do is share my screen. Is that okay, Sheila? Janice?
Yes.
Totally.
Okay. Absolutely. So I'm going to share my screen real quick with everyone. And for the purpose of you actually getting the visual of the training in IML Academy. That's the only reason I'm sharing the screen with you. Okay. So as you get into Basic 4, a lot of you have already started going through Basic 4 already. And kudos to you for staying on top of your training in the IML Academy. This training is priceless, and this training is going to change your life. So make sure you go through the training, okay? One of the questions I received from a customer that I signed up is, how can I bypass the training and just immediately start making money? There is no, this is the educational platform, and you have invested in yourself. Do not try to bypass this training, okay? This training is priceless, okay? I learned more in Module 1 that was priceless to me and covered the price of my actual sign up on the information I got just in Module 1 alone. So to go through basics 1, 2, 3, 4, and technical analysis, and then you get additional training in intermediates 1 and 2 and advanced training. This training platform, this educational platform is priceless, okay? So let's talk about Basic 4 real quick. Give me about 5 minutes and I'll wrap this up. Like I said, I'm not gonna keep you long at all, okay? But let's look at some of the things that you need to look at in Basic 4. You're gonna have your confirmation checklist, okay? Which is the first video. Your confirmation, you're gonna get 5 confirmations that you can use when entering into a trade, okay? Remember, I am always a student. I'm always learning. You will always be learning, okay? So take heed to these videos and make sure if you don't get it the first time, watch it again. If you don't get it the second time, watch it again. I had to watch some videos 3 and 4 times, and I still go back and watch videos that I've watched 2 and 3 and 4 times, okay? And so why do you need these confirmations, okay? You're gonna understand after you get through why you even need these confirmations, okay? And you're gonna respond to, learn how to respond to the market instead of trying to predict the market. You don't want to try to predict the market, okay? But you actually want to learn how to respond to the market based on the charts and the indicators that you're getting on the charts, okay? So before you enter into a trade, you should actually know why you're entering into that trade. Don't just enter into a trade willy-nilly, but know why you're entering into that trade, okay? And the criteria, some of the criteria that you're gonna be looking for is it trending? Is it going with the flow? And these are some of the things that you learned in Basic 1 and 2. Is it going with the flow? Because again, the trend is your friend, okay? So is it trending? Does it have support and resistance? You're gonna be looking at your long wicks, the price action, consolidation. You're gonna be looking at pullbacks and the trend line again, okay? Understand, the goal is to take high probability trades. That's the goal, to take high probability trades, okay? It should not be that you going into a trade saying, I don't want to lose, because we all know that you're going to lose sometime. But the goal is to win more than you actually lose, okay? So take good notes in that confirmation checklist when you go through that video. And then you want to, we're gonna look at how to use the harmonic scanner in your Basic 4, okay? Understand that the harmonic scanner is the #1 tool that brokers use, okay? So you wanna take good notes in this video, okay? And the harmonic scanner will ultimately tell you if the trade is even worth taking, okay? It'll tell you if the word is worth taking. And we understand and we know that with the harmonic scanner, you're gonna get an accuracy rate of 80%. It's going to be accurate 80% of the time, okay? So the harmonic scanner is a powerful tool to use in conjunction with your web analyzer. If you're using that with your swipe trades, if you're getting signals through swipe trades, a powerful tool to use in conjunction with that, okay? And then you're going to, they talked about it on day 1, how you can trade with your phone. You're going to get some, they're just going to reiterate some training on that. trade on your iPhone, trade on your Android, okay? So you're gonna go through the confirmation checklist, how to use the Harmonic scanner, trade on your iPhone, trade on your Android. Now, the next 2 videos, I want you to pay close attention to, because this is gonna be critical for your success and building your income, okay? And that is proper risk management, okay? You have to use proper risk management, okay? So I'm not gonna go into, what proper risk management is, but we trade 10 cents for every $1,000 that you have in your account. Proper risk management, okay? And I will tell you, let me share something with you real quick. Today we was into a trade, and I was up like $200, but I did not use proper risk management, and I blew that $200 and wound up coming out breaking even at the end of the day, because I was too greedy, and I recognized I was too greedy, and I'm thinking like, man, I'm on a roll, I'm doing it today, and off of 10 and 20 cent trades. And I was up, but I didn't exercise that proper risk management, because once I got up, I'm thinking, oh, I can trade more. And that wasn't the case. I should have stayed in my lane. I should have kept to what I was trading. And really, I should have just got out when I was ahead and lived to play another day at the end of the day. You know what I'm saying? Sometimes you got to get out when you're ahead and not get too greedy, okay? And that's what I should have done, okay? But you have to use proper risk management. And I'm going to tell you, in this basic 4, take good notes on proper risk management. Go back to it over and over and over again. Keep reminding yourself that, you know what, I'm not going to get greedy. I'm going to stay in my lane. I'm going to exercise what they're teaching me to do. And I promise you will be successful. I can't guarantee your results, but if you do what they tell you to do, then you will be successful. You will win more than you lose, okay? And so that's pretty much an overview of what you need to take away from basic 4 when you get into the training. And as far as technical analysis, the one thing I want to point out, because you're going to see 7 videos. You're going to see the power of twin trading. You're going to see the trading view tutorial. You're going to see price reversal zone, confirmation checklist. And then you're going to see support and resistance, pullbacks, and then you're going to see trend lines. But the one thing I want to reiterate, and I'm not sure if Sheila and Janice is going to come behind me with this, but take good notes, okay? If you don't have a notebook already, if you don't have some kind of notebook or something taken, I'm on my 2nd notebook. Take good notes, people. I can't stress that enough, because I guarantee you, the market changes so much, you will have to go back and review your notes. You will have to go back and go into your notes and review videos. You will never know everything you need to know. Like Adonde said in the video, we are always students. We're always learning. I can't stress enough. Take good notes, and you will be successful. Watch the video several times, and again, so glad that you all pressed your way to get on. So glad that you are, to the new members, so glad that you are part of the Dream Team movement. And, we catching pips, okay? So if you excited, as I close, if you excited about catching pips with us, just put 111 in the chat box, and let's get it going, okay? We're here to make sure that everybody is successful. Tracy is awesome, and everybody in the group is awesome. And I don't want to start calling out names because I'll miss somebody, but everybody is awesome. And I'm excited to be part of this movement. And I'm glad that you are part of this dream team as well. Let's get it, people. Janice, Sheila, back on you.
All right. He got me pumped up. That's what I'm talking about, Ronnie. Awesome job. Great advice for our new customers. And it's so absolutely true. I mean, certainly take everything that Ronnie said on board. But if I had to hang my hook on one of them, it would certainly be watch that greedy monster, because you probably don't even realize that you have that until you start getting in your trades, until you start seeing your money multiplying. It's just that thing. So as long as you can suppress that and stay true to your trading plan and the proper risk management, you will certainly win. And just remember, you know, we compounding daily. And if you maintain consistency, you will certainly win. You'll see your money multiplying like it never has before. It's really amazing. It's really amazing. Anything, Sheila?
Yeah, I want to say I'm pumped too. Thank you so much, Ronnie, for doing a great job in sharing that. And so in reference to the quiz for tomorrow, Ronnie did actually go over what you can pay more attention to. And so just know that with what you have reviewed already in Basic Academy, Basic Modules 1 through 3, and now adding on Basic Module 4 and Technical Analysis, you will be able to answer questions in quiz number 2. I can assure you that. So again, quiz number 2 will have 10 questions, multiple choice answers, and just like it was today, we're going to share the link in the Zoom chat as well as in the Facebook group for you to take it while we're on the session live, and then we'll go over the needed answers tomorrow. But if you have any more questions now, please go ahead and unmute yourself and ask the question or type it in the chat, because we are not going to keep you too long. We're going to help you get some time to study. So again, if you have any questions, please let us know. Let us know now. Any questions going once? Any questions going twice? Okay. Where are the results from the quiz? Okay. So Phyllis, the results were available to you. Now, depending on if you did it on your phone or on your computer, is how you would actually see the answers. So what if you would like to do, what you could do is just go ahead and take the quiz again, but pay attention to what's happening as you submit your answer, because after each answer, I don't even know, again, it's different on the phone than on the computer, but there is a way for you to see your own results when you're still in the Google Doc. I hope that helps. And then just take it again.
Yes, I was on the computer when I did it. And of course,
Okay.
my computer stopped.
Oh, okay.
And I didn't know if you had mentioned it or not.
Okay. Well, I don't remember because I got stuffed off the computer as well at some point. So, but what you can do is go ahead and take it again, and hopefully your computer will be nice to you and let you go all the way through, and then you'll be able to see your results before you close out the Google Doc, okay?
Okay, I did complete it. I just didn't know.
Okay, no problem. Okay, so Jania, here's the question. Based on the resistance line set, I'm still a bit unclear on how we are supposed to know when to get in a trade, whether it be a buy or a sell. Okay. Based on the resistance line set, you are still unclear on how you're supposed to know when to get in a trade. All right. So Janice, do you want to go over this?
Yeah. Based on where we are, in all fairness to you and everyone here, that is a question that you just have to get the training. So there isn't a short answer, a quick answer, because it requires a level of training and understanding. But if you have, remember we talked about the trend is your friend. So you're going to identify the trend, meaning what direction is the market ultimately going in. Hold on one second. What direction is ultimately going in, and then you want to begin to position yourself for that, whether it's a buy or a sell. So that's how you determine that. And again, you know, for a buy, you know, the market is going up. The candlestick is going up. So you know that particular candlestick is in a buy. And if it's going down, then that particular candlestick is in a sell. Overall, you want to look at the overall direction that the market is going in at that time, whether it's a buy or a sell. That's kind of like the short answer, though there's some little intricacies involved that you have to consider as well. And how to get in the trade is basically going to be predicated upon that. When is the best entry that you can get in? you got to learn about pullbacks and retracements and just learn how the market moves. And based on that, you'll know is if this is a good point to get in a trade or not. So it's really not a clear answer that we can provide you tonight, because there's a whole lot more involved in making that, decision to get in. There are different things that you have to consider before you actually make that move. And that's all part of your analysis. That's all part of, learning how the market flows and understanding, the price action and the buys and the sales and the trend. I know you want a quick answer, but there is no short, quick answer.
Hey, Janice.
Mm-hmm.
And just to piggyback on what you're saying, the question I would ask her is, has she went through Basic 4 yet? Because that Basic 4 module deals exactly with what she's asking. And you touched on everything that it touches on in your 5 confirmations that you need to enter into a trade.
Right.
So, like you said, go through the training, go through that Basic module 4, continue your training, and it will definitely address the question that you just asked.
Mm-hmm.
Okay, so yeah, but you touched on everything, Janice, in regards to entering into a trade. But the key is to go through the training.
Go through the training, and like Ronnie said, multiple times. I still go through the training. You have to do this multiple times until you get the basic, because that's part of your basic, your foundational understanding, and then you want to continue to expound upon that. But this next module that you all are going to be going on to will, like Ronnie said, it will answer that question for you. Good question, though. Great question.
Exactly. And she said thank you. She hadn't gone through module 4 yet, but now she knows.
Okay.
So,
On the right track.
Okay, so I wanted to say this on the recording for anyone else who does watch the replay later. In reference to the quiz, we had a few people help me out to let me know exactly what you will see. So when you take the quiz, after you submit, a button appears. Now, again, it might look different whether you're on your phone or on your computer, but the button will probably say View Score. Okay, and then you would click on that button, and then more than likely it will open up another window for you to see the results from your quiz. The test is, okay, quiz number 2 is going to cover Basic Module 4, Technical Analysis, and a little bit of everything that you just went over from Basic 1 through 4. So I hope that answers your question in reference to what quiz 2 will cover. So again, yes, quiz 2 is going to cover Basic Module number 4, as well as Technical Analysis, and then it will still review some of what you've already went through in Basic 1 through 3. Okay, so again, for those of you who are going to take the quiz after the Zoom is over or you're watching the replay, you will be able to see your results. So after you submit, a button appears and you can click that button to review your results. Whether you're on your phone or computer, the button may say View Score. Okay, so we're good with questions, not unless anyone else has any more questions, but it looks like we covered the questions. People are needing to say goodnight right now. Okay, let's see this question. When you all first started, did you stick with up to 3 to 5 currency pairs to trade before you moved on to more? Okay, it's a good question, Patrick. So I know from Adeze, who is the voice that we hear in our basic module trainings, she did talk about paying attention to the major pairs. So for me personally, I kind of allowed myself to get overwhelmed at first. And it really wasn't until months later, after doing demo and then doing live as well, that I realized, oh, okay, because the size of my trading account is not as big as others, it would help me to look at currency pairs that have a low spread. Spread is a topic that we'll get into probably tomorrow, as well as next week. But I did not, to answer your question, I did not stick to only 3 to 5 currency pairs in the beginning. Now, I do stick to about 8. unless someone says, Sheila, here's a perfect trade. Get in it now. If that happens, then I won't get in that trade. But that's what I can say for me. What about for you, Janice?
Okay. Well, in the beginning, of course, I was so eager, hungry, all of that. So I was jumping all over the place. And I soon realized for me, I need things simple and easy. And so for me, I stick with two currency pairs. That way I can study the movement of those pairs and how it moves. And I can just focus on two. And of course, the two that I do focus on does have a smaller spread as well. That's going to be very, yeah. So that's what I do. And of course, you know, you can decide what's best for you. But I just need things to be simple and easy, cut and dry, and give me an opportunity to study those pairs so that I can learn how it moves, and that will better position me for my trades.
That's good. Okay, so he said thank you to both of us.
You're most welcome, most welcome.
Okay, so it seems like we can wrap up. And if any more questions come through, we'll take your questions right now, though. And if not, then we will go ahead and wish you all to a great night of studying, a great night of catching up if you need to. And then we will see you again tomorrow. And I can assure you that we will get into more talk about resistance and support and resistance in other times. Okay? Janice, anything else you want to say?
No, you covered it all. It's been a great night, and we certainly look forward to seeing you back here tomorrow.
Okay, great. All right, everyone. Good night. Bye.